Hello everyone, Andy here. Let's have a look at the DAX futures for Monday, October 30th. We will also have a look at the higher time frame. For the record, today is Saturday, October 28th. So here we are looking at the weekly chart, and my take on the DAX is that we did a wave 1 up right here. We came down as a wave 2, and so now we might be working on a wave 3 here in the higher degree. This becomes our target area. Of course, we do not go there as a straight line. We should go there as 5 waves again. And so I believe we had a wave 1 finished right here, and that we are now working on this wave 2. The target area for this wave 2 here is the area that we can find by taking the length of the wave 1, and then the area between the 0.5 and the 0.854 FIB retracement is our target area. So this looks quite bullish after we've done this wave 2 correction. It could mean that we start a wave 3 to the upside, normally the strongest impulse, the strongest and longest impulse of the 5-wave structure. But for the moment, as you can see here in the weekly, we are in a bearish cycle. So therefore, if we are bearish, actually every possible bearish scenario is then possible, or I would not exclude it. And as you can see, I was already talking for some weeks about this kind of scenario, that this could play out. And so now I also put it on my chart. It's not my favorite scenario. I still prefer the scenario here in green, but I have to put it on my chart because now we have some. I would say it becomes technically possible that we have this expanded flat structure. So this structure here, this ABC, what would happen is that the wave 2 is not in yet here, but that we are still working on this wave 2, and that we are doing this wave 2 as an expanded flat structure. So it would mean that we have here our wave A in 3 waves, 1, 2, 3, then a wave B up, overshooting wave B. This is what an expanded flat structure does. And then from here, we can have an impulse down as a wave C. And so why do I put this now on the chart? Therefore, we go to the daily chart. It starts to look that we have from our high here 5 waves down. So a 1, a 2, a 3, a 4, and a 5. For a very long time, it looked like 3 waves down. So we had this kind of structure, 1, 2, 3. But now we took out this low here, and this last part also looks like an impulse, I would say. And so then I would consider this here as an impulsive structure down, 5 waves down. And if we have 5 waves down, it means that something has to follow. Like, this is an incomplete bearish structure, 5 waves down. Like, what I would say in the best case, like from the bullish perspective, we would have this here, like this is a wave A, we go up as a wave B, and then another wave C down, 5 waves down, so 5 down, 3 up, 1, 2, 3 as a B, and 5 down as a wave C, like into this area. Wave 2 correction finished right here after a corrective A, B, C, and then we go up again as a wave 3. So that would be the scenario here with the wave 2. But because we have done 5 waves down, this could also be a wave 1 down, actually. So this can be a wave 1 down. What we can then have is a wave 2 up, and then a 3, a 4, and a 5 will follow. And this brings us in here, as showed in the weekly, this brings us in the scenario where we are doing a wave C down. Then we have a wave 1, 2, 3. Instead of stopping here in the wave 2 area as an A, B, C, no, we get a wave 4 and another 5th wave down. So because of this 5 waves down, an impulse from here as a wave C is now something we should consider, like it becomes more concrete. I always told you that this could happen in every higher time frame analysis, but now there are reasons to really put it on the chart to have a closer look at it. And this reason is the 5 waves down from here, because you cannot end with 5 waves as a corrective structure. No, it should be 5, 3, 5. Then you have an ABC. Then the correction can be over. Or in worst case, it is 5 down, corrective move up, 5 down, corrective move up, 5 down. Then we have the impulse, the wave C, the impulsive wave C down. So my primary scenario would be an A, B, C for now. Now, if we look at the 4 hour, for a very long time, I did not really like or I did not really expect the 5 waves down from here. The main reason is that, the beginning, the start, let's say, did not really look like an impulse to me. I'm counting here 3 waves, but now with this ending impulse down, we are kind of forced to count this as a 1, a 2, a 3, a 4, and a 5. There might be an alternative scenario, and the scenario that has been for a very long time my primary scenario, and it would mean that we are actually still doing a WXY structure, but that we have shallow corrections up. So for instance here, like we could count this as a wave W, here as a WXY. Then in this wave W we have 3, 1, 2, 3. In the wave X we have 3, 1, 2, 3. Here in the wave Y we again have 3 as an ABC, short wave A down, B up, and then C down. So 1, 2, 3. Here again, wave X up in 3, 1, 2, 3. And so what could happen now is that we are working on this wave Y, and that, from here we might be doing an A, B, C, like this. So this is 5 waves down as a wave A, then B up, and then a wave C down into this area. This here, the area in red, would be the target area of our wave Y, and we can find this area by taking the length of the wave W, the length of the wave X, and then here the area between the 1 and the 1.618 FIB extension is our target area for the wave Y. So that would be then, I would say, like the fastest path to end this corrective move, because the scenario in green assumes that we have a nice push up as a wave B, and then another impulse down as a wave C. So this corrective move might take quite some time to complete. The fastest way to complete the corrective move would be the WXY, that we here have our wave A, B up, and then C down. There might even be a variant in case we are again moving in 3, then this could be wave W, wave X, and now we have a wave Y down. So then this is 1, 2, 3, corrective move X up, shallow wave X, and then again 3 down from here, 1, 2, 3. So this is not on my chart. I would count this as 5 waves now. This would be the primary expectation. If we look here at the lower time frame, at the 1 hour, yeah, this kind of looks like good 5 waves, like 1, 2, 3, 4. And now yesterday we followed the Nasdaq and the Dow Jones, and we took out here our October 23 low. Until yesterday, it seemed like this was kind of holding, but now we followed the Nasdaq and the Dow Jones. So the Nasdaq actually did it on Wednesday, then the Dow Jones followed on Thursday, and now the DAX did it yesterday on Friday. So we took out this low, and yeah, if we analyze this here in more detail, yeah, this looks incomplete so far. We should have 5 waves down, and yeah, I only count 3. I would count it as 1, 2, and we are now working on the wave 3, a 4, and a 5 should follow to complete this impulse down. If we look here at the 15-minute, this would be my count for now. Wave 1, wave 2, and now working on a wave 3. So this could play out like an ending diagonal. And then yeah, from here I would expect upside again. However, it is always difficult to kind of catch the low right here, because we are bearish in the higher time frame. So if you want to catch this low here to go long, then yeah, you should know that you are trading against the higher time frame direction. So I would expect some more downside. This looks like an incomplete structure. So both on the lower time frame, an incomplete bearish structure. We should have 5 waves here. So far we have 4. And then yeah, I would say also here in the higher time frame, yeah, this looks incomplete. This looks like an incomplete bearish structure. If we have to correct this move because of this 5 waves, the least bearish case would be an A, B, C. The most bearish case would be that this is a 1, a 2 up, and then 3, 4, 5 down, even taking out this low. And yeah, the fastest way to end this correction would be this WXY scenario, but then in this structure we really have like shallow wave X, and yeah, they do not really meet the guidelines. Like they do not reach the 0.5 FIB retracement level, what they normally should do. Okay, overall incomplete bearish structures, I would say, both on the lower time frame and on the higher time frame. If you enjoyed this analysis, please like, subscribe, comment to support my work, and I see you back on Monday for an analysis of the lower time frame. Have a nice weekend. Bye bye.